Hey everyone, Elgin here. So today what I wanted to do is really show you guys with actual visuals what it means with these rates going down. Not only how much money does it really save you, but also what it can do to your buying power. So if you got pre-approved earlier in the year and rates were still over 7%, now that they're in the low sixes, specifically for the scenario I'll be showing you today, it's going to go ahead and put it really into perspective and really hope it's information that can go a long way in planning your future of home ownership. So let's jump right into it and really get into what I've set up for you guys here. So I've set up a comparison here. What I did FHA loans, and primarily because a good amount of first-time home buyers or individuals are going to fall into the category of an FHA loan. And what you'll notice is I went ahead and set up a purchase price of $350 for the first two scenarios. Then over here, this last scenario, I went ahead and set up $378, and I'll get into that in just a moment. So let's first compare the first two comparisons. So this is a purchase price of $350,000. What you'll notice is earlier in the year, your rate could have been easily around 7.25, maybe a little higher, maybe a little bit lower. Today, we're easily seeing rates at 6.25. We're actually even seeing rates lower than that, to be very clear. Again, this is all an example, so you can really see how interest rates going down changes the marketplace, changes your buying power, and can help you in your budget, of course. So I really hope this is going to put that into perspective. The other thing I did to make sure everything's apples to apples, all of these are 30-year fixed loans. So keep it very, very simple. All right, so let's jump right into it. We'll click on more info. So on FHA loans, for those of you that don't know, one of the requirements for the down payment, it's at least 3.5% down. So that's going to be the $12,250 here. From there, we're going to go ahead and jump right into our payment. So that's going to mean that our principal and interest payments are going to be right here. And you right away can see a massive difference that we're going to go ahead and do right here on this quick calculator from the principal and interest. Right, so we're going to see that that's going to go ahead and go down by $228.40 just by the interest rate going down 1 percentage point. For some, that difference is going to be even greater depending on your credit and loan scenario, just to be clear, and also what can be negotiated on. And I say that because we are locking again rates, some of these rates in the mid fives even, just depending on what's being done there with negotiations. Of course, I like to give a total picture of a budget. So for this purpose, I went ahead and set up taxes, property taxes, at, of course, a pretend scenario. We don't have a real property here. If you had to get homeowners insurance, you are also going to have PMI. So your total payment would have been around $3,008.91 in this first scenario at a 7.25, but at a 6.25 rate, you're at $27.81. Again, saving you easily $228 a month, which you can see right over here. So it can make a big difference for a lot of us, whether or not we're able to afford that home comfortably or not, right? So really, it's a great time to buy, especially because rates just went down. So on the seller side, it's still catching up, meaning sellers are not aggressively seeing multiple offers yet, but they will be. And if anything, if this happens kind of like it did during the pandemic, where when rates went down, prices started skyrocketing, you really want to go ahead and jump on board now at the early stages of this shift. Even before the Feds have even announced that rates are going to go down, we're already seeing it due to the recent market reports that have come out with inflation and everything else going on. Now, why did I go ahead and show this additional scenario? Well, this additional scenario would be, well, now that I can get a lower rate, what does it mean for my buying power? Well, it means that you can technically purchase more home. And what I mean by that is the way loans are approved is they're not approved by the purchase price, the loan amount necessarily. They're really approved by debt to income, which is your total monthly payment versus your income. So to have a similar payment that you would have, that $350 a month with a 7.25, well, at a 6.25, easily you can jump up to $378 and have a very similar payment, meaning that you're getting almost a $28,000, $30,000 increase in your buying power, which can make a huge difference in the home you're able to get if you're comfortable with that higher payment or affording that max payment you were originally approved for. Let's jump into that. You'll see here, $378 home, but with a 6.25, your principal and interest is lower than the home at 7.25 with $350 on a sales price. So it does make a big difference on your budget and can completely impact everything. So let's look at a little bit more details here so you can see all the different impacts. So as you can see, down payment of course went up a little bit because it's a little bit more expensive, but because it's all percentage based, even your bottom line and your total out of pocket, we're comparing, it went up a total of about $600 out of pocket to buy a home that's 30 grand more basically. So in the grand scheme of things, it doesn't really impact your bottom line too much. You have a similar payment, but you get a whole lot more buying power. And I really hope this puts it into perspective. If you want to see a specific scenario or want me to run a specific item for you, feel free to reach out, DM me, send me a message so I can help you out. Best number to reach me at is going to go ahead and be 407-902-2262. Really look forward to helping you all. Take care.